So what are non-bank lenders and what purpose do they serve? What are the pros and cons of working with a non-bank lender for property investment? I'm Andrew Malcolm from Mortgage HQ, and today we're going to have a look at the pros and cons of non-bank lenders. So what are non-bank lenders? Well, non-bank lenders are specialist mortgage lenders, and in this case, helping property investors, helping homeowners with debt consolidations. Non-bank lenders are serving the space in the market just outside where the banks can play. So non-bank lenders have been in New Zealand for a very long time, and non-bank lenders are very common around the world, helping people with their mortgage needs. Some of the key important, really good things about non-bank lenders are they can be really fast if you need them. So if you've got a property settlement coming up and main banks are just too slow for you, it can be really strategically helpful. That's Nala banging there. It can be very helpful for you if you've got something that's settling, banks can't help, you need quick turnaround. Some mortgage non-bank lenders are very quick, and that's where relationships are key. So if you're borrowing often, you'll have a go-to lender, or if you've got a mortgage advisor that knows what they're doing, they will have a specialist lender that can get something done quickly and you can restructure or refinance later. So non-bank lenders can have restrictions, but that's my boy in the background. Less restrictions. So if you go to a main bank, they'll have a long list of conditions for most applications. The restrictions are still going to be there and conditions are going to be there with non-banks, but there might be less of them. So non-banks can be good in terms of a broader range of people that they can help. So some people that might have citizenship or residency issues or not qualifying for, then also self-employed people. So if you don't have financials, long enough history of financials that the main banks would be happy to give you application, non-bank lenders are a good alternative there. Now, investors, so if you're a property investor or a budding property investor and you just don't have that 40% deposit you need for that next purchase, maybe a non-bank lender is the right place to look. So non-bank lenders are not bound by the same rules that the Reserve Bank has set on main banks, so you can often get away with 20% deposit for investment properties at a non-bank. Non-banks sometimes will allow for exemptions on properties that might be a bit more pragmatic than a main bank. So if you've got a property that has issues or something that's not consented, some non-bank lenders may specialize in this area. Now, where non-banks are often helpful is if you're a property investor, maybe you need to leverage a bit more than what the main banks are going to allow for. They can be helpful to help you restructure or extend or renew interest-only terms to help minimize your cash flow outgoings, to help get you in a strong position for your medium-term goals. And if you're a property trader or you're doing property flips, the main banks really want long-term mortgages, your 20, 30-year mortgages. Non-bank lenders, some of them are specialists helping property traders, where they'll give you a 6 to 12 month term. The interest rate's going to be higher, but they understand the game and they actually want to lend often and with higher rates and shorter terms, which is very different from what the main banks want. So non-bank lenders, there's 30 plus of them at least in New Zealand, and they've got their niche that they're strong in. And if your goal meets that same niche, you really want to be working with a mortgage advisor that knows about the strong attributes for each of those non-bank lenders to give you that strategic advantage. Now, some of the cons, the negative sides of non-bank lenders are obviously interest rates are going to be higher than what you're seeing advertised at main banks. So these can be 1.5%, 2% higher than what you're seeing advertised on billboards for main banks. Sometimes even 3, 4, 5, 6% higher, depending on the duration, depending on the risk for the lender, depending on the circumstances. If you can borrow money at say 7% instead of 2%, and it's just for 6 months, and it means it's going to allow you to make $100,000 of profit, then you just got to factor that cost of doing business. But you also got to understand, non-bank lenders, they make money from having those slightly higher rates. Now, obviously, with main banks, there's often application fees, but these are waived. Now, the The fees with non-bank lenders vary between the lenders, but there's often going to be application fees that are non-refundable. There's going to be broker fees. So if you're borrowing $1 million from a main bank, the cost of borrowing and applying is going to be probably less than the cost of borrowing with a non-bank lender. And you have to take into account that the length of term that you're going to be able to borrow that money might be much shorter than with the main banks. So you might have to reapply after a year or 2 or 3 years if you want to keep that money at that non-bank lender, which means you need to be sure about your position. And it leads me to the next point is sometimes if you go to a non-bank lender, your property lending can get stuck at that lender because the reason you've gone there is the same reason you can't refinance away. You can't qualify for main bank financing, so you just need to plan that out. Now your portfolio, sometimes to get the non-bank lending, you're going to have to take another property with lending to that non-bank lender, which means you're not just taking new lending at that higher rate, but you're taking a lot more lending at that higher rate. A lot of the non-bank lenders, they only work with brokers, so you might not be able to negotiate or work through things on your own, and you're going to have to pay some fees. So, it's a means to an end. If you're using non-bank lenders, it's often for a strong reason, but that reason is a good reason. It's going to make you money, or it's going to allow you to keep that property. So if you want to learn about non-bank lenders, let me know in the comments below, and don't be afraid to email us for more information.